Texas is becoming a hotbed for Bitcoin miners, not only for its cheap power, but also its friendly state policies that is actually paying miners to shut down. Joining us now to discuss is Gregg Dixon. He's the co-founder and CEO of energy software platform Voltus. Hello there, Gregg. Thank you for joining us. So Voltus works with many big Texas miners to maximize profits based on the flow of electricity. Depending on demand, they can sell back to the grid and make good money, correct? So what kind of patterns are you seeing here?
Well, Bitcoin obviously offers an incredible amount of electricity flexibility. These are large electricity consumers that have instant control over their demand for electricity. So they have the ability to respond to any type of grid signal. So for instance, if the price for electricity is high or there's congestion on the grid, they're able to respond very quickly and take advantage of selling their power back to the grid or meeting grid reliability needs if there's a potential for a blackout or a brownout.
For Riot Blockchain, one of Texas's largest Bitcoin mining operations, they earned about $9.5 million in power credits last month by turning off its miners, according to an update for July. I wonder, though, is this at the expense of taxpayers?
You know, it's not. And really the analogy to think about that we can all understand is an overbooked airline flight. The fact of the matter is, when an airline overbooks a flight, the lower price for all tickets inures to the benefit of consumers who are on that flight. But if there are 2 or 3 passengers that have been overbooked on the flight, they send a price signal at the gate to basically say, for those who are willing to wait 2 hours or 4 hours for the next flight, they'll get a $500 voucher to simply wait. And that's really how the electricity grid works. And because Bitcoin miners have such a tremendous amount of flexibility for when and how much electricity they consume, that's in essence what's going on here, because they purchase power often very inexpensively, soaking up power that might be produced by wind excessively at night and there's no consumer. They can afford to curtail their electricity when prices are very high and send that power back into the grid.
So are they essentially making money when they have to give up electricity, so to speak? And, I wonder how much of that in profit they make.
Well, it really depends on the price signal sent by the electricity market at that time. To use the airline analogy, if there were 3 passengers overbooked on a 100-passenger plane, and at the gate they said, we'll pay $500 for 3 people to wait, and only 2 people raised their hand, they might send the price signal, if you will, to $1,000 per flight for 3 people to wait for 4 hours. And that's really how the electricity grid works. And in the case of a Bitcoin miner, they might be buying their power at, say, $30 a megawatt hour. But when the electricity grid in real time is sending a price signal that they need as much power as they can, and they're willing to pay, say, $1,000 a megawatt hour, those Bitcoin miners are holding that purchase and arbitrage of power that they can sell back into the grid. It benefits the grid, driving prices lower.
That's interesting. And so here we have a chart from Voltus's technology platform, Volt app. It's showing real-time energy consumption data of a sample Bitcoin miner. Can you explain to me what the lines are telling us?
Yeah, sure. So this is real-time electricity consumption for a 30-day period for a Bitcoin miner. And so what you see in the green shaded areas is, in essence, a price signal being sent by an electricity market that says, based on the economic arbitrage, if you will, of this Bitcoin miner, it makes more sense for the Bitcoin miner to curtail their electricity for those particular hours. And that's why you see the power being consumed at high levels and then dropping into that green area, because the economics of mining Bitcoin are better if they curtail power. And all you're seeing here in this real-time view is 30 days of flexibility of this particular Bitcoin miner reacting to electricity market products and prices.
I wonder what can other states learn from this, because in New York, mining is a very heated debate. They have legislation putting a moratorium on mining, and that could be signed. And they're concerned that it's actually increasing their energy bills. But in Texas is the view that it's actually a net benefit for Texans. What do you think other states can learn from this?
Well, I think what other states can learn, and obviously the Bitcoin mining community cares a great deal about this, is the value of what we call social license. So Bitcoin miners obviously consume a lot of power producing their product. That has the potential of destabilizing an electricity grid. However, because of the flexibility of these loads and the ability to react to price signals or reliability signals in an electricity market, these Bitcoin miners have the ability to deliver much lower electricity costs to these states or to these grids by soaking up the unused megawatt hours during troughs in electricity consumption while avoiding the peaks that tend to be more expensive or put the grid in a reliability situation. So with the right market construct, Bitcoin miners will actually drive prices down while improving the reliability of the grid.
Oh, really interesting. So what lies ahead for the industry amid these stagnant crypto prices? What are you hearing from clients?
Well, with prices low, flexibility goes up. And so when the price of Bitcoin goes down, obviously, it puts pressure on operating margins. And because 80% of operating expenses for a miner are electricity, as Bitcoin prices go down and electricity prices remain the same, they have a much greater sensitivity to the price of electricity. And as a result, their flexibility or willingness to curtail their electricity demand goes up. And so the grid is really benefiting from that. And we saw that this summer to date in July and August with thousands of megawatts of Bitcoin miners reacting to high prices and to needs to keep the grid from experiencing a blackout or a brownout.